Alright guys, we got a new series where we talk about price targets of other people, not us. We don't own any of the shares mentioned on the slides, and as usual, none of this should be taken ever as financial advice. Now guys, if you're really interested in building a 6 to 7 figure portfolio, we've got the perfect solution for you. Head over in the comment section or the description to sign up for our free masterclass where you can get all these proven steps to achieve it. Alright, so this new series, we're going to talk about the analyst price targets that we see all the time on reports, and we are giving our responses to some of the reasons or presentations that they give for the company. So we start with Mr. DIY, very popular company. A lot of people talk about it.
Yeah.
For those who don't know Mr. DIY, well, you need to go out more. Very easy to find in malls. And yeah, so I think they've not been doing very well. I think since IPO, yes, they're up, but when you really look at late 2021 or early 2022 up to now, I think the decline is, if my eyeballs are right, close to, I think, a 30 to 40% decline.
Yeah.
Right?
Correct. Yeah, exactly. So yeah, it has been taken a huge, massive tank. Also partly I think in 2023 or late 2022, if I can recall correctly, I think Credo also did exited Mr. DIY some stakes.
Credo was the one really driving this IPO.
Yes, correct. And then so that's also kind of like contributed to the downfall of Mr. DIY. But then the analysts are still pretty bullish on Mr. DIY. But before we go to their target price and also the projections, right, of what they think about this company, so far they have been doing pretty decent. I mean, if you look at the earnings on quarter, everything has been pretty stable. So far, there's no slowdown into it. So far so good. And this is the analyst calls. So you can see that, so if you see the highlight, right, it's because these are all the same names. That's why I put it. And if you notice, Kenanga's target price for Mr. DIY,
the only one that says is the drop.
Correct. So you can see like last time Mr. Kenanga, actually they put a target price of RM1.85. Then they kind of like slow down. They kind of cut it like another 10%. So now it's like RM1.67. But then if you look at BIMB, M Invest and RHB, they maintain. And M Invest has a very bullish target price. So they think that this company is worth RM2.60, which is 79% up from that open price, which is RM1.45. They
are the most bullish, right?
Yes. But if you look at the price, they kind of like bump up a little bit already. So there's an 11% increase.
That's right.
So who knows? Maybe it's them, maybe it's someone else. But so far, the initiated report sound very bullish, so it could be them. Okay, so this is M Invest thesis, the one that thinks that Mr. DIY can reach RM2.60. So this is what they say in their report. They say that they are very bullish on their expansion strategy. Everything is very smooth sailing. The store now that they have is about 1,168. But then the goal is to Mr. DIY's goal for 2023 is to open 1,260 stores. And so far the earnings have match their expectation for M Invest, and they project this Mr. DIY's earnings in 2023 to be around 4.4 billion and a profit about 572 million, which is about 45 times PE. And for 2024, they expect another bump in revenue, which is about 20% increase.
20%? Okay.
Yeah, so it's to about 5.2 billion. And then another one, it is the profit is about 725 million. So if you look at the second half, they are making about 2.1 billion and 278 million in profit.
So if you double it, it's 4.2, which is a 200 million increase on which is a 200 billion dollar. 200.
If you prorate it, it's gonna be 4.2.
Yeah, so it's only 200 higher, but they're anticipating for 2024 to have 20%.
To be 5 billion.
Yes.
5 point something billion. Yes, exactly.
Yeah, that is
that's why they put a very high target price for it.
Yeah, and they're gonna achieve this. I'm not sure did they put any expectations on the number of stores for 2024.
So far, no, yeah, because right now the goal is just 2023 first. I think we shall see the numbers of stores in 2024.
Exactly. But you see, from 1168 to 1260, that's about 92 increase, right?
Maybe this one is got to do with their overseas expansion as well. That is not
So they're
included
factoring in.
this,
Okay.
yeah.
All right.
Yeah, it could be also. Yeah. So yeah, so far we have this invest, which is very bullish. Then we want to have a look at Kenanga's thesis because they were bullish initially, then they kind of cut a little bit. So for February, the sales and margins are under pressure. That's what they say because of this inflationary concern and so rising operating costs. They give Mr. DIYs at a very reasonable PE, about like 25 times and 28 times in 2023 and 2024. That is actually the reason why they cut because they see that there's kind of like a headwinds ahead because of this inflation concern. And then in May and August 2023, they say that their results didn't really meet their expectation. They are quite disappointed because the top line and margin actually came in weaker. So they kind of also cut a little bit in terms of their projections for financial year 2023 and 2024. So you can see that the PE right now, they are a little bit conservative on the earnings side in the future.
So, I mean, we can see whether inflation actually affects a little bit. So, if we go back, I think they increased from 2021 to 2022 in 600 billion. So that's roughly a slightly under 5% increase, right? And then in 2022, which is when inflation actually happened, you see that it didn't really affect that much. People still spend like 5%. People still spend on this stuff, and they still grew by 5%. But it seems like inflation is affecting 2023 a lot more. And I don't think that, I'm not sure, but if there's a seasonal effect, let me see if there's a seasonal effect. So, okay, so you can see on the fourth quarter of each year is typically the highest.
Yeah, I mean, it kind of makes sense, right? Because it's closer to Christmas and everything.
But do take note that if you compare, I think, it's about the same, although the rise for 2021, I think from Q3 is a lot bigger than Q3 2022, Q3 2024. So if let's say we use the same, delta, we can expect a 1.3 billion ringgit Q4 if we prorate, if that makes sense, right? Because from here to here is 200 million, then from here to here is also about 200 million, 150 million.
Yeah.
So let's give them benefit of doubt, 1.3 billion. If that's a 1.3 billion, and let's say Q3, because it tends to be the lower one, right? Q3 tends to be lower. Let's say it's about 1 billion. So you add on another 2.3 billion, you're gonna get 4.4 billion.
Yeah.
And that's only a 400 billion increase on 400 million increase on 4 billion. So that's a 10%.
Yeah.
Sorry, I misspoke earlier on. 3.4 to 4 billion is not.
It's 20%.
It's 20%.
Yeah, it's not.
So 20%. Now 2022 to 2023 is only going to be 10%.
Yeah. So that's the 10%, which is kind of within their expectation. See, like 4.4 billion. And then this one also is, but this one is they are a little bit bullish. But then, even though their numbers are bullish, but then the valuation, they think it shouldn't be that. Yeah. So you can see there's two different school of thoughts between Kenanga and Invest. But but then their 2024, I think they also kind of projected another other than Mr. DIY. So there's like, I cannot remember what's the name. Is it Mr. Toy or something like that? There's a few more stores that they do, like they sell toys and sell other gadgets and stuff that is going to come up and running. But then the gestation period is still like pretty far off. It's not going to be maturing anytime soon. But so yeah, that is for Mr. DIY, 79% gain, not a buy sell call, but this is just their opinion only.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description.
So the next one we're looking at is Technovation.
But I think before we go on, if you had to give not say an answer, right? Of course, we've got the extremes of Kenanga versus M Invest. Where would you lean? Now, I know my answer is I will lean more Kenanga. I think it's more in line. As you can see, the calculation I did earlier on, pretty much more Kenanga. Where do you lean?
Actually, no. Kenanga is actually more bullish in terms of their number if you look at their numbers, right? So 4.7 billion is that if you prorate it everything, right? 1 billion, 1 billion, 1.3, 3 billion. Then they kind of expect quarter 4 to make about 1.5 to 1.6 billion in revenue.
Right, but not M Invest.
Not M Invest. So if you look at M Invest numbers, is pretty much in line with what you prorated.
So, but that means the difference is they think that the multiple expansion will be bigger.
Yes, correct.
So I would say that I'm in line with Kenanga's valuation, but more aligned
numbers with M
Invest
numbers. Yeah.
That's what I would say.
Yeah, about the same also. Yeah, I'm more the conservative side also. More on the valuation of Kenanga. I mean, for these kind of big companies, over 25 times P, I think that is where they should be at lah. So yeah, but that's just our own opinion.
Yeah.
And yeah,
move on to the next one. Technovation. Okay, Technovation. Higher than IPO, but much lower than all-time high in recent months. Call it a year. They're doing pretty decent.
Yep. So far everything has been pretty much okay, except that they didn't really reach to their 2021's high. I think 2021's that's where the tech boom actually started. So right now they actually kind of like improving in quarter 2 2023 as compared to the last year's quarter 2 2022. So that kind of shows the sign of them making back profit, or they can control costs better. But that you need to find out more in the reading their quarterlies. So this is the analyst call. So there's only
Mostly
one analyst.
Bullish. Yep.
It's only public bank only. And they have been like talking about this stock since 2022. And so far they have been pretty bullish. They give about 56% upside to reach about 2.57 ringgit per share.
Now I want to preface this by saying, guys, this is only from i3.
Yeah.
And i3 won't be able to capture all analyst reports. There are other analyst reports out there. I think if we were to cover as much as we can, I think we will probably not have enough time to do it. But yeah.
Yeah, I think also we need to look at their latest price targets, because they always change on.
Exactly.
Yeah. The last time, if let's say they are super bearish, today you never know whether they are still bearish or bullish.
Correct.
So yeah. Okay, so this is public banks thesis. What's interesting is that they expect that this new plant, which is coming from the China. It's going to be it's going to be a major contributor to their prospects going forward. So if you don't know about their China plant, they say that it's about 3 times bigger than the Taiwanese plant, and they kind of anticipating the China's recovery to boost their sales and profit in all of their business segment, which is their Cebu, SMBU, and SSBU, which is the future one coming. So this is the projection for 2023. They're going to expect them to make about 389 million, which is about another...
It's the same, right? 389 million.
I think they need to add another like 60% if you want to prorate these two together. Because this is quarter 2, right? 161 against 389.
So that would be another 100 odd million.
220 million for quarter 3 plus quarter 4.
Right. So 400 million.
Yes,
okay,
correct.
10 million increase.
Yeah, and also quite a very reasonable PE. I think they put about like 30 times. That's for 2023. And then 2024, they kind of expect them to make about 8% increase. Also very conservative valuation so far. But then in March and August 2023, they also say that so far the business is kind of still online, although there's still a little bit of hiccups because of inflation and whatnot. But they still expect big profits coming in 2024 and 2028 from all of their business segments.
So obviously the big change is suddenly their PE has changed.
Yes, correct. So you can see that numbers reduce a little bit for
but
2023.
the PE change. That's very interesting.
Yeah. That's a very interesting thing also.
So I don't get this thinking, because how can you change the valuation just like that?
I think because this is based on the current number. Current number, they think that it's very they wouldn't be able to match it. But then they think that in the future, which is in 2024 to 2038, they're going to make big profits. That's why you can see their PE is about 30 times.
What they've actually changed is that the short-term profits will drop much bigger, right? By 10 million on about 20%.
Yes, correct.
But they're going to increase the profits in the future projection in 2024.
Yeah, exactly.
My only thing, especially with me, Technovation, or any company doing, expanding in the factory, is always apply conservative discounts. Because you just never know whether they have the right amount of orders or not.
Yeah,
that's all I can say.
Yeah, and another interesting thing that when I was reading about their analyst report is that they have this segment breakdown which you cannot really find in Me's report. So they did specify like how many percent is it coming from Taiwan, China, and Korea, and all the stuff. And also they did break down based on and also the based on their industry. So you can see that about 55% comes from mobile device. And then 16% comes from PC, and then there's a 5% renewable and auto and all those good stuff. And also they did mention that this is the future business focus. So you can see that they have 3 business segments. So SEBU, Cebu, it is more on the ATE side of things. Their wafer level chip scale packaging, ATE, that kind of machine. And then the other one is SMBU. That one is more on their Aurelius, if I can recall, that's the name, Aurelius, right? The Taiwanese company that they do material, solder ball, and all the stuff. So you can see that the breakdown for each of these revenue contribution is, they did specify all the numbers over there for you. So that's me actually. Yeah. Any comments on me?
No. As I said, just be careful when people make projections on, factory expansion and things like that. You just never know what hiccups you can get, whether it's regulation, whether it's orders changing customers, whatever. Just be careful. Alright guys, enjoying the video so far? If the answer is yes, remember, like, comment, subscribe. And as far as comments go, if you don't like the video, do let us know as well. We always take all sorts of feedback as long as they're constructive.
Okay, the
CGS
last
entry,
company.
so logistics. Okay, so this company, obviously, it did decent, during COVID, as most logistics companies did. In a bit of a downtrend right now. So here's the earnings profile. So you're looking at pretty flat.
Yeah. Revenue is increasing, but then profit is very flat. Or actually it's like not improving.
Yes. So on the one on the right, they are going to maybe match their revenue for next year.
Yeah, potentially. Yeah.
So let's start.
Yeah.
So it's only TA.
Yeah, only one TA also.
All very bullish.
Yes, exactly. So
never changed their opinion.
But then, if you notice, the target price actually changed a little bit.
Wow.
From 95 cents to now about 76 cents. So they cut about
okay, so I just
20%.
want people to just observe and to notice something about this graph. What's the standout pattern that you see in this graph?
Standout pattern. I mean, one thing is that they can change in terms of their bullishness.
For sure.
And they are still very bullish on this company.
So let me tell you what I see and what I think most viewers need to be realized.
Okay, I think I also realized also something. The share price also is dropping, and then their initiation also.
So the question is, what is actually affecting the target price?
It's the share price movement of the company. If let's say it's going down,
but you're supposed to figure out what the intrinsic value of the company is and the target price, irrespective of the open price.
Yeah.
So again, this is a pro tip for you guys. With reports, typically, a lot of these people are writing these and they are being paid a certain amount of money, and it's their job. And nobody wants to lose a job, especially nobody wants to look silly, right? No one wants to say, imagine you are in, the August 26, 2022, you think your target price is 95.
Yeah.
It drops. And if you really did your research and you really get convicted about it, what you would say when it drops? Well, no, it's still at 95 cents because the value of the company don't change as quickly as share prices. That's what people should be doing. But what you do see is that as it drops from 56 to 43 cents, the target price will drop from 95 to 76 cents. So it's not the fundamentals or even the analysis that's determining the target price, in my humble opinion.
Yeah.
It's the open price.
Yeah.
Why is that the case? Because imagine if your boss comes into you, hey, it's already 43 cents, you say it's at 95 cents target price. What's up?
Yeah.
Then if you're the analyst, you're just like, well, nothing changed. Well, what you should do is nothing changed, so it's still at 95 cents. Or the more likely thing is, yeah, you know what? I think I don't want to look stupid. Let's drop it to 76 cents.
Yeah, exactly. Actually, this is very different from Technovation, which is public invest. So you can see that share price kind of like,
so this is also similar. The only difference is that I think they're a bit more stable.
Yeah.
But there's also a little bit of a trend of as it goes up, then they keep moving the target price up.
Yeah. Correct.
Again, it's not wrong. It's not illegal. None of this is,
I mean, they
but
can give advice.
Understand that this is very prevalent.
Yeah.
Right. And understand the limitations of the reports that you see. Okay, anyways. So what does TA think?
Okay, so far they have cut down their bullishness. So they say that there's a higher than expected operating cost and tax also. They didn't really explain further, but that's just the main point about it. And then they'll cut their projected profit for financial year 2023 about 40%. So initially they give about 30 million. So right now they expect them to make about 17 million. So yeah, you can see there's actually a very big cut in terms of their projections. But then they expect them to make back or actually make better profits in 2024. So they expect them to make about 2 times from financial year 2023's number. But then revenue is going to be about the same, which is also why they are ready. Their share price also, they think that it's going to go back to the 2020, I think it's like 2025 over here, 2014 to 2015 around this share price level. So if you look at the profits that they make around this time, right, it's where the share price is around around 60 to 70 cents. So that's actually how they came out about their target price, which is very interesting. So so that's about it for TATC. It's a very short one. They didn't really explain much.
So if I try to read into what they're saying, it could be what they're trying to say is if you're looking at the old earnings profile, and because presumably logistics is a bit of a cycle, based on the old earnings profile, it should be valued at 76 cents per share.
Yeah, correct. Based on, because they're going to achieve this profit, it's going to go normalize back to 2014, 2015.
So you see, that's very interesting to me. So I assume that they have not changed their way of thinking with normalizing profits. But I think they probably play around with the valuation, right?
Yeah, could be also. Yeah, because you can see that, it's still at 12 times PE for 2024. If
but
that's what they're
expecting. Consistent? Did they always think it was 12 times?
No, because you can see 2023 one, they did cut profits, right? Initially it's 30. If it's 30 million, right, it's going to be also more or less 12 times, like 14, 15 times. But because they expect higher than expected costs, that's why they cut profit, and now the PE for 2023 is going to be 26. Yeah. So yeah, but that's just... Anyways. Yeah, that's their opinion. Okay, so this is the final comment. Yeah, I just want to reiterate again that target price is basically their opinion.
Yes, and you need to know what influences the opinions.
Yeah.
What should influence the opinion is sound understanding of business fundamentals. And some of the reports that we've seen here, as good. I like the charts that Technovation public event shows and things like that.
Yeah.
But do take note that they also change over time. And equally, if not more important, is to figure out why they've changed it over time.
Yeah.
And to be completely honest, whenever I see the patterns that I saw with CJ Century, that puts a question mark for me. Right? It's because it's too smooth. Right? And of course, at the end of the day, DYOR, do your own research. You are your best analyst. Yeah. So just to end, if you're someone who don't have a lot of time, but you want to invest, you know how to invest, you know how to do research, but maybe you have kids, maybe you have a demanding job, then FIRL Pro will suit you. FIRL Pro is designed for busy people like you to shortcut their research journey into finding investments that are pretty decent. Now, we don't give target prices, but we do share with you the business fundamentals and how they're performing. And ultimately, we want to cut short that research journey for you by 90%, so that really it's that final 10% of making a decision, gathering just a little bit more information to complete the research. That's really your job if you have FIRL Pro by your side. On the right, you can see the returns so far. So far, so good, pretty decent. And if you want to get a taste of what the reports look like, you can check out our free sample in the comment section or description. Or if you want to see the whole thing, you can actually make a purchase within 10 days. If you feel like this is not really for you, you can request for a refund and you will get it. No questions asked, except maybe you just want to know what was the reason you decided to quit the program within 10 days. And guys, thanks for staying all the way until the end. As usual, always appreciative of the support, and I will see you in the next video.